All right, so here's a video where I'm going to be breaking down one of my trades that I did maybe a month ago. I'm going to explain the setup, I'm going to explain my approach, I'm going to explain why essentially I took the trade where I did and why I added on at certain points. And, one of my biggest goals with it is really just to provide value. And I think anybody that has reached out to me in the past and has had an interest in it. I mean, I get a lot of questions, and what I want to start to do is I want to be able to answer some of these things for people that are interested in trading. And even if you're not interested in trading, I hope you at least enjoy the video. All right. So, one of the first questions that I get, or one of the main questions I get rather, is how do I choose my stocks, right? Like, how do I decide to trade these sets of stocks for the day? And, what I simply do is I trade what's referred to as gappers, right? So, gappers are stocks that are rising the most in value during pre market trading, which technically opens up at 5, but you're going to see the majority of volume come in probably around 8 o'clock to that 9:30 time frame where the market will then open for trading at that point. So during pre-market, what I'm going to evaluate is the top 3 to 5 stocks that are rising the most during pre-market. Now, these stocks might be something that I'm familiar with or I have a relationship with, if you will. And other times, it's my first time really hearing of the company. So there's going to be a few things that I look for to dictate what type of opportunity that is and how I feel about taking a trade on it. So, one of the things that I look for, and it's one of the most important things, is the stock float. And what a stock float is, it's essentially the amount of outstanding shares a company has issued for sale on the open market. So, for example, if you look at your Apples, right, they're going to trade billions of dollars of shares, or excuse me, billions of shares, period. And, with these companies that I like to trade, I'm going to look for something that's more 25 million or less. So it's going to be categorized more in the small cap type of range. And the reason why I choose those specific stocks is because they react better to high relative volume coming in. So as more people are trading those stocks, they're going to present the most volatility, which you're going to need in order to have success. So another thing that I look for is the price range. With this type of strategy, I'm only going to trade stocks that are typically between $3 and about 15, right? Anything over that, it gets a little more difficult to trade and a little more difficult to manage risk on because there's going to be bigger swings. So, I can't necessarily take 1,000 shares of a $50 company, and if it goes down $8, that's a big deal. It's an $8,000 loss that you'd be taking. So what I'll typically do is I'll look, from $3 to $15, and what I'm going to want to evaluate during the pre-market is what kind of opportunity does this specific stock have to break its pre-market high at the open. So, in the example that I'm going to show, this is a stock where on a slower day, you have one of the top 3 gappers. Not something that I've heard of, but, again, it looked like an opportunity where, I could do pretty well with it. So, this particular stock had a high of day of 882. And when we were coming up to that 9:30 point, that market open time, what you saw was the stock was trading around 735. Now that's quite a way off from its high of day of 882. So if you were to ask me, does that have a great shot at breaking its pre-market high at the open? I would say not necessarily. But there are also other factors that are going to go into it. And one of the biggest factors is something called VWAP, right? That's volume weighted average price. And that's represented as a dotted orange line on my chart. And I'll point that out when the video comes up or when the trade comes up. But what this essentially measures, it measures how the price is reacting to the volume. Meaning, if a stock goes up $2, but there weren't necessarily a lot of shares traded in that moment, then what's going to happen is the VWAP line, the VWAP indicator, is not going to react as drastically as if there were, all of a sudden a ton of more shares that are typically traded now being exchanged between traders. Now you're going to see a way less gradual and significantly more steep move on that VWAP line. And the reason why VWAP is very important is because if a stock is under VWAP, right, it's under that orange dotted line, that's going to typically mean that the stock is weak, right? And I typically will not trade stocks that are under VWAP unless they have a chance to break it. So on this particular trade, you have VWAP at, I want to say about $7.55, $7.55. And, again, we're at that $7.35 level approaching market open. So one of the setups that is a valid setup to take, it is the break of VWAP, meaning a stock has dropped and then consolidated under that VWAP point. I can take that trade, and the goal would then be to have the stock have continuation through the high of day. So you take the break of 755 with the anticipation that it does have a chance to now maybe hit $9. So what I'm going to do is when I play the video, I'm going to talk through why I took these trades at certain points and why I exactly punched the button right when I did. All right, so if you've made it to this point in the video, first and foremost, I want to thank you for not letting me bore you and turning it off right away. But in this part, what I want to do is I want to explain some of the things that I look for. And obviously, I won't be able to go into, a ton of detail. So for the sake of time, I'm going to just really do a quick rundown of what some of these indicators mean and what exactly I need to see in order for me to take a trade. So, that being said, the first thing that we're going to look at is the two prices, right? We see right at the top, and let me pull that back for a second. So the box on the top right of the video, that's called a level 2, right? And the white numbers that you see on the side is something called the time and sales. Now, what those are actual real-time sales going through. So we're going to use that as a gauge. And what you're going to notice is once the video starts playing is that, sometimes they're going to be red, sometimes they're going to be green, or sometimes they're going to have a green background with white lettering, or inversely, they might have a red background with white lettering as well. Now, what that means is that there's certain sales that are going through either at or above the bid or the ask or below it. And we're going to use that to determine who's buying what at what point. So obviously what we're going to want to see here if we're taking a long trade, meaning we want the stock price to go up, is we're going to want to see continuation of green sales coming in, right? That means that there's a lot of buying interest at that price point, and that's very important if you're going to take a breakout trade, because that's how we confirm that other people are interested in the same exact setup, because without that you're not going to have a trade resolve, right? So if, for example, if I wanted to just buy this stock right now, I press the buy button, what's going to happen is I'm going to buy at $7.35. Now, if I went to go sell within the same exact second nothing moved, I would then have to sell that at $7.05, even though the price didn't go anywhere, right? So that's very important, right? So on the right-hand side, that is what you buy the stock for. On the left-hand side, that is what you can sell the stock price for. Now, what I'm not going to get into right now is the fact that you can technically sell on the ask, which is the right side, but then somebody's actually going to have to buy your shares, right? And sometimes you're not going to have sales execute because of that. But, perhaps I'll make a video on that another time. But for right now, what I do want to focus on is the way the spreads behave. So the spread is that 30-cent margin between the bid and the ask. Now, what you're going to notice is that as sales go through and as volume increases, you're going to see those spreads widen and narrow, widen and narrow. And that's very important, right? So keep an eye on that. And what you're also going to look for, if you notice it says volume 4,000, right? What that actually means is that there's been 4 million shares traded on the day. Now, this is a stock that typically doesn't even have a million traded in a day, and we're sitting here pre-market, right, or right at the opening bell, and you already have 4 million shares that have exchanged hands. So that's a big deal. That's high relative volume, and that's what we want to see. Now, if you also look all the way to the left in that top line, right under where it says PSHG, which is the ticker of the stock we're going to be trading, you're going to see it says 5 million. Now, what is that, right? If you recall earlier in the video, I had actually mentioned something about the stock float. That is the actual stock float of this particular stock. So what that's showing you is that it's under 25 million shares issued, which is what I personally like. And at about 5 million shares, this stock is really going to have a lot of room to really get rangy and start resolving in a big way. Now, what I'm not going to exactly break down right at this moment is all these different lines of prices and the different colors you see. All those are different market makers, right? Those are which market makers are offering the stock at that specific price. But again, I'll probably do a video on that another day. And the other thing I also want to point out very, very briefly is the red symbol there that says LULD. Now, that indicates that if a stock rises, or in the case of this particular stock, if this stock either rises to 803 or dips right below or dips very, very rapidly to 657, what's going to happen is it's going to initiate a stock halt, right? That's when they stop the stock from trading period in 5-minute increments, so they can essentially pair up the buy orders and the sell orders. And that's a regulatory thing that was put in, probably about 15 years ago at this point. So I won't get too into that. Another thing I want you guys to really pay attention to is also the number next to the price. Now, that's a big deal because that's how many shares are for sale at that price point. So, the bigger that number is, the more resistance you're seeing at that price. So, for example, to keep it short, if I were to see next to 735, if I see 300, then I wouldn't buy that because that's 30,000 shares for sale at that price point. That means that 30,000 shares need to be issued on that penny at 735 in order for the stock to continue to progress in price. So, this is a stock that's not showing much resistance at this point. And what you're going to see is that the stock has gone up to 882 during pre-market. It's then fell to a low of, right around $7. And it's consolidated between 7 to 750 for, about 20 minutes at this point. Now, one of the things that I look for is really what the stock has done pre-market, right? We don't want it to fall off too far from that pre-market high. So what ends up happening is if I see that a stock retraces more than 50% of its pre-market gain that made it a top gapper in the first place, then I'm going to pause for a second and I'm going to wait for that stock to rise a little bit before I'm even interested in it. Now, if we move over to the chart, right, I use the 1-minute and 5-minute chart for my trades. And what that means is that each candle you see is going to represent 5 minutes, what the stock did in a 5-minute time frame or in each 5-minute time frame on this particular chart. So where I want to get in is I want to get in right for the break of that VWAP, that volume weighted average price, which is the dotted orange line that I also mentioned earlier. So as it's approaching that line, I'm going to want to take an anticipatory position and get in maybe, 5 to 10 cents right before that breakout point to give myself a shot at it. Now, one of the most important things is, especially when you're first starting out, is you have to manage risk, right? You can't trade if you lose all your money. So one of the biggest things is sticking and staying disciplined with a stop loss, meaning I'm telling myself if this stock goes down, 60 cents, for example, I have to cut that. I have to get out of that. And in a lot of cases, I'll keep my stop losses tight, maybe 10, 15 cents, because the beauty of it is I could always get back in. I don't have to, hold a loser and hold the bag. I can let it dip as far as it wants to dip, and I can re-enter at a more advantageous point. Now's where we get to execute the actual trade. So what I'm going to do here is I'll walk you right through each step that I take, exactly what I see, and why I buy and why I exit at specific points. So, as the video starts, what we're going to want to look for, we're going to want to see that 4,000 number increase dramatically, just like you saw there. So what I did was I bought at 753, and with smaller share size, I only bought 500 shares at 753. Wanted it to prove itself before I increased size. So what happens is I now increased as it dropped because I wanted to lower my cost basis. So I actually intentionally only bought with 500 shares instead of maybe putting in 2,000, 3,000, because I knew that was a possibility. I knew there was a possibility that there was going to be a rejection off of that VWAP level. And that's what happened there. You saw a pretty dramatic drop. So what I did was I took something called a starter position, right? Not my whole size that I plan on using on the trade, but I took a starter. So if it flushes like that and I didn't have an add point, that I would be able to get out of it and really not risk an overwhelming amount of money. So what I'm going to look for here out of the trade is I'm going to want to look for continuation of buying volume, meaning on the right hand side of that time in sales on the level 2, you're going to see a lot of green coming through, right? And I'm essentially going to try to get out when I see that slow up and start to dissipate, because if nobody's buying, now it's all of a sudden very susceptible to dropping again. So, as the trade continues here, you see it kind of working through the low sevens, right? You don't really see a lot of dips, right? It's holding at each level very well. You don't see any, 10-cent drops. So I'm fine to stay in the trade as long as I see that these levels hold themselves. Now, as I get out of the trade here, what you're going to notice is that I sold at 756. Now, I bought, my first entry was at 753. Now, on 500 shares, if I made 3 cents of profit, that's a $15 trade. So what ends up happening is I increase my share size, right, at a more advantageous point. So instead of my cost basis being 753 where I initially entered, it's now going to be 727. So even though I sold only 3 cents above my original entry, it ends up being, a 29-cent trade. And on 1,000 shares, that was a $292 profit on a 40-second trade. And that's why it's important not to take your trades thinking, I think this is going to do something at some point. You have to buy these stocks right when you think they're going to break out. So it's so important to understand the level 2. It's so important to understand the time in sales. It's so important to understand pre-market charts. And if you can do all those things, then you can put yourself in a position to really be sustainable in your trading, and that should really be the first goal. Your first goal should not be making money, and you're going to be really disappointed if that's your main goal in the beginning, because your main goal should be protecting your account, protecting your money. And when you look at it through that lens, you're going to find it so much easier to stick to your stop loss, because if I'm being honest, that was a huge problem I had in the beginning. When I first started trading, I wanted to hold something just because I didn't want to admit I was wrong on it, So I'm sitting there holding it saying it's going to work out, it's going to work out, it's going to work out. Well, what if it doesn't, right? So one of the biggest pieces of advice I can give is just get out, because you can always get back in, always. So, hopefully you guys start to see, if you can start to understand these breakout points, they're not super sophisticated to understand. And does it take practice? Absolutely. And one of the first things that you probably noticed is the time in sales on level two, it moves so quickly at times. But what I would equate that to is, if you were to start playing baseball today and you've never played in your life, you're trying to hit a 98-mile-an-hour fastball. It's not going to happen, and it's not going to happen overnight. So you really have to give yourself time. If you truly intend on trading these types of strategies, then record all of your trades, watch all of them 5, 6, 20 times. Whatever it takes, and I can assure you these things will start to come through. Now, the very last thing that I want to address, just because it's so important, is the fact that you guys saw me at 701, right? And that's a pretty substantial dip from where I first got in at 753. Now, if the truth is, if that stock continued to fall to 670, 680, I wouldn't still be in it. At that point, it's okay to give yourself one shot with an add-on, right? It's not okay to average down. It's not okay to keep buying it every time it dips. You buy when it dips, you buy when it dips, you buy when it dips, and now all of a sudden you're completely over leveraged in a position that really needs a miracle in order for you to even get back to what you're in it for. So, with all those things being said, I sincerely hope you guys got value out of this video, and I hope you guys ask me any questions. If there's anything that I can help with, or if you guys want to talk to me about a trade that you guys have taken, or if there's any way I can point you guys in the right direction, I'd be more than happy to help. And I hope everybody watching this video was able to take something away from this and sincerely apply it if this is something they want to do. So I appreciate you guys watching this video up until this point. And if you guys want to give me any honest feedback, even if it's negative, I'd be more than happy to hear it. And best of luck with your trading, guys. I wish you guys the best of luck.